Good morning. Welcome to BA 250. This is the first time I have done these camera shots, so we're going to see how this works. I want to help you to make sure that you know how to get into the classroom, the Moodle classroom. So the screen you see now is the HSU entry screen that we all see when we come into the campus. Over here in the upper right hand side, you'll see that it says log into My Humboldt, and so you click on log into My Humboldt, and your My Humboldt screen comes up, and if you click on the username, you might see your username, or you might have to type it in, and then you have to type in your password. I'm typing mine in now, and then you log into OK, and you get the My Humboldt screen, and in the very upper right hand side you'll see that it says Gmail. Yours will say Student Center and it'll say Moodle, so I'm going to click on to Moodle, and the HSU Moodle screen will come up. In the left hand side, in the navigation box towards the top, the fourth item says My Courses, so you click on My Courses and a new menu will appear on the screen, and you're going to click on Fall 2013. Now you'll have several classes there. Our class for online is BA 250 and it's 46376. For my ground class it's BA 250 46469. So you'll click on the class that you are enrolled in and the one you're listening to. When the class comes up, you'll begin to see that there's a welcome, there's the course syllabus, there's the news and announcements, and then there is week one. And in week one you'll see that there's some introduction, there's a sample problem, there are some PowerPoint slides, there's for the online class there's a discussion board. There's not one for the ground class. And then there's assignment 1 Excel, and just below that is a worksheet. So in the assignment 1 is the Dropbox where you will eventually post your file, but right now I'm going to click on the BA, and then there's the BA 250. Right now I want to go over with you the online chapter 1, for both classes, chapter 1, and I'm getting my book out. Chapter 1 begins with information about the introduction to accounting and the reading goals and the learning goals for that chapter as prepared by our authors. Now, next I want to talk to you about the topic of accounting in society, the role of accounting. In the United States and in much of the world, we use a market structure, and so societies are created around, and societies hold within them a free economic system or a modestly free economic system of exchange, where society has a market to allocate resources and a market where customers can choose what they want to demand in the market and what they want to buy. So we talk about this free market economy. Well, then the question becomes, of course, who's going to supply these goods that these consumers want to demand? So organizations, businesses, and non-businesses organize themselves to supply the goods and the services that customers may want to buy. Some customers may pay for their goods, and some customers may get their goods as a free exchange, but there's still organizations, as Exhibit 1.1 points out, that are resource owners, and they want to sell those resources, or they're willing to exchange those resources with a conversion agent, and so that becomes the business or the free enterprise that the nonprofit enterprise that acquires these resources either by buying them or having them transferred over to them. Many times nonprofits buy their resources also, and then they convert those resources into goods or services. And so they convert those resources, and then consumers or users can buy those resources from them or acquire those resources from them. The consumers then pay a price, and the difference between the cost of the product and the price of the product is the profit, or in the case of the nonprofit, is the accumulated wealth that the nonprofit holds. And then the conversion agent takes that profit and buys new resources with them, and they redistribute some of the wealth to their investors in the form of dividends, if it's a corporation, and a withdrawal if it's a partnership or a proprietorship. So we have this cycle of these conversion agents, and we're going to be calling those business and non-business enterprises that provide goods and services to the customers. Now, when those enterprises are functioning, they have to keep records of how many resources they have, how much they paid for those, how the resources were used, and then the number of products that were produced, and then the number of products that were held, and then finally sold to customers, and then the prices that came in the revenues for those products, and then the cost of the goods are matched against as expenses are matched against those profits, are matched against those revenues, and that creates profit. And so the accountants are the persons that keep track of all of these exchanges and transactions and these resources. So the book tells us those are physical resources, labor resources, and so accounting provides information about them. They tell you about the types of accounting information in the book on page 6. They tell you about non-business resources and how they use it, also on page 6, and they give you some schematic on the top of page 7 icon examples of what some of those resources might look like. So the way that we provide information, capture those resources, and then produce them. Financial accountants produce information for outside consumers, outside users who may want to be investing or loaning the business money, and so they'll want to know how the business is doing. Those would be people who buy the stocks. Those would be people who, those would be the investors. The creditors would be people who loan the business money, who buy their bonds. And so outside users would be investors and creditors to the business. Now, internal users, managerial accounting supplies their needs, and you'll take a managerial accounting course next semester. So as we begin to look at these accountants and what their career paths are and what they do, we find that what they try to do is measure the transactions that are occurring in the enterprise and accumulate those measurements and then report those out in financial statements. So there are some rules about measurement, and those are discussed at the bottom of page 8, and the Financial Accounting Standard Board sets the rules for public accountants to follow. Now currently, accounting around the world is in a transition. The generally accepted accounting principles of the United States have been the rule-setting body and the rules that were followed in the United States and in other countries, but absolutely in the United States. Now come in 2012, last year, most of the rest of the world moved to international financial accounting standards, and the Securities and Exchange Commission in the United States has set 2014 as a goal date for the generally accepted accounting practices to convert over to international standards. So while most of you are still in school or certainly early in your career, you will experience that conversion. Now, some of these ideas, most of these ideas actually, that you're going to read about and study this semester will be present in the international rules and regulations. They're going to converge pretty closely, I think, to what generally accepted accounting principles have been in the United States. And the first one we'll talk about is the entity so we're going to have these reporting entities where we keep their resources separate from each other and from personal resources. And so we'll have these business entities that we've been talking about. I think that there will still be financial statements, the income statement, the balance sheet, the statement of change in owner's equity, and the cash flow statement. Those that are very similar statements to those will still be used. And so in order to compile those statements, we have to have elements. And those elements are called assets, economic resources to benefit the future, liabilities, economic obligations that have to be paid in the future, and owner's equity, the residual interest that's been invested or contributed by the owners, and the residual net income that's been retained by the business and not used or paid out or redistributed to the owners. So those elements, those three basic elements will be there. Those appear in the balance sheet, the assets and the liabilities, those future benefits and future obligations. They appear in the balance sheet, as does the owner's equity. Now the revenues and the expenses are recorded separately, and they're reported in the income statement. Revenues minus expenses equals the profit. So you'll start learning about revenues and expenses and how they're reported. We also will introduce you in a few weeks to gains and losses. They're like revenues and expenses, but they're not earnings. They're non-earnings changes in wealth. So as we look at these elements that we use to gather information, you'll see on page 12 there's information about the accounting equation. Page 13, they go into introducing you to assets and liabilities and owner's equity, common stock contributed by the owners, and retained earnings, the earnings held by the business. So then on page 14, they start telling you about the accounting equation, and then expand that to show how you can record transactions. And they give you a series of events starting on page 15, and they want you to think about those with respect to the sources of resources that are coming into the business. Was it cash coming into the business? Was that an asset? How was that used? And then how are we recording those transactions? So as you work through the examples on page starting on page 15 and actually going all the way to page 18, you should read those transactions. You should look at them carefully. You should talk them through for yourself and see if you can indeed recognize what accounts are changing, what elements are changing, and the accounts under those elements. You'll notice that this book continues to use the accounting equation all the way through. So as we look at each of these transactions and we read about the economic conditions in the transactions, then you will begin to record each of these transactions. And on page 18, they have a summary of how 8 or 9, 7 transactions might look at a time. Then they recap it for you on page 19. So this first section of the chapter is about recording transactions. And we accumulate those together, those transactions, and then we report them in the financial statements. So on page 19, we begin to see about the financial statements. We have information on the financial statements on page 20, and on page 21 there's a very nice schematic that shows you that the income statement is compiled first, and then the statement of change in owner's equity is compiled, and then the balance sheet, and then the cash flow statement. And the reason that they're compiled in this order is that you need the information from the income statement for the statement of change in owner's equity. You need the statement of change in owner's equity for the balance sheet. You need all three of those for the cash flow statement. So they show in that schematic how those relate to one another, and they talk about each of them on the various pages. So on page 22, they have both the statement of change in stockholders' equity and the balance sheet. On page 23, they have the statement of change in cash flows, and then on page 24 they go through the closing process, where you take the temporary accounts of revenues and expenses and dividends and you close those out at the end of every operating cycle, which is either a calendar year or a fiscal year, and you close those into retained earnings so that the wealth of the enterprise is all reflected there in retained earnings and in stockholders' equity. And then that takes the account balances down to zero for revenues and expenses and dividends, and you start the cycle over again for the new operating cycle, whatever that might be, a calendar year or a fiscal year. And then on page 25, they show you how you could do a horizontal analysis instead of the vertical analysis that you had back over here. I'll go back and look at that page. The vertical analysis where the financial statements are shown. I should have it. I'm sitting here flipping pages in front of you. Not a very good plan. Aha. On page 21, it's a vertical analysis. It goes up and down among the statements. On page 25, it's a horizontal analysis, and it takes it across the page. Across the page. And so what you begin to see, too, is an expanded accounting equation with cash and land equal to notes payable plus common stock plus retained earnings and plus revenues minus expenses. So you get that more expanded equation for the horizontal analysis. Now, I want to take your attention back to a very important insert that you might not spend time looking at. It's right here on page 14. It's called Check Yourself, and it shows you the accounting equation and the ways to use algebra to solve for any part of the accounting equation. And that's a very small version of the accounting equation. By the time you get to page 25, it's a very expanded form of the accounting equation, but you can still use algebra to solve for all of these, any one of these unknowns. So what you learn on page 14 is very important to make sure that you refresh your algebra skills, and then on page 25 that you refresh yourself on how to expand those algebra skills for a more complex problem. Now, we accumulate all this information because we think users outside the enterprise want to look at this when they make investments in the business, or when they make loans to the business, or when they buy the bonds of the business, which is a form of loans. So on page 26, you're introduced to the concept of financial analyst, and the person who would begin to analyze these financial statements, use ratios, use proportions, and want to try to understand some of the underlying economic dynamics that are happening within that enterprise. And so we will be doing that each week. Each week I've picked an assignment where you are asked to begin to do simple analysis and then to do more complex analysis. So they use Merck Company, and they talk about some of their information on page 26. They talk to you about the annual report of Target Corporation, which is Appendix B. And Appendix B is all the way at the back of the textbook, and you can actually look at Target's financial statements and see what a publicly held company's financial statements look like. And Appendix B is all the way back on 697. So you can begin to look at those. Now, on 697, and it's multiple pages long, very long. So then you begin to get an idea of the complexity of financial statements and the need to analyze those. Now, this 20-minute presentation has been about this chapter. At the end of the chapter, you can look back on reviewing some of the information. There's a self-study review problem that starts on page 29 as you begin to look to the applications of this information. Now, I expect you to read these chapters before coming to class on Monday, or before trying to start the homework problems for the online students. I hope that you will read these and look at the PowerPoint presentations, perhaps watch this video each week for what's in the chapter, work this self-study problem so you have some ideas of how they go together and what the solution looks like. And then after that starts the questions and the key terms and the application of what's in the chapter. So I will be the assignments in the class, and the example problem that starts the Moodle class each week will be an application of what's in the textbook. You'll have a solution there that's presented to you. It's in Word, so you can open it easily and you can look at it, and you can look at the questions in the textbook, that question in the textbook, and see how the solution works out. Now, I hope this has been a meaningful time to you to introduce you to the ideas and the concepts that are in the chapter, and I will be meeting with you each week with an introduction like this. If you have any questions on any concepts in the textbook, please send me an email, bring them to class, come to my office hours, and I'll be happy to go over them with you. I look forward to working with you these coming weeks.